everything seems to be crashing all at once. Yesterday was the worst day in history for the NASDAQ. Bitcoin came back down to its previous lows at around 60K. But today, I'm going to be going through 5 long-term signals for why this particular dump is actually one I'm buying now. I haven't been buying. I've been very bearish ever since November or so. All my shows have been incredibly bearish apart from a few select tokens ever since then. But this actually, to me now, is coming into very, what I would consider, value areas. And I'm just going to go through why a lot of the longer term signals that I've been looking at are essentially coming to be hit right now. And it doesn't mean that Bitcoin can't go lower. In fact, I probably think it does actually go low. I'm going to show you where I think it goes today. But there are a few signals here that mean that for the most part, I think a large portion of this pain is done. And now it's just time to wait. So let's go. All right, so the first chart is a very simple chart. This is Bitcoin on the weekly time frame, okay? And there's 2 moving averages that are associated along here. The 2 moving averages we've got are the green 200 simple moving average and the blue 400 exponential weekly moving average. Now, the reason I use the 400 is, it seems like an odd number, but really that's just a month, right, give or take. So you've got the 200 simple, which has governed the lows multiple times, and you've got this 100-month simple exponential moving average, which has also governed the lows when that 200 simple has failed. And what you can see is that throughout history, Bitcoin has, when it's come into this band between the blue and the green, it doesn't stay there very long, and it tends to come out of it. Now, there was this period here during FTX when the 100 exponential moving average was pierced. This was Luna here, and then it was pierced here for FTX. Could something like that happen here? You know, like could Saylor blow up a real blow up? Not just, you know, STRCs not trading at $100, but like a real force. The biggest holder of Bitcoin becomes a forced seller, a real forced seller. You know, in like 4 or 5 months, that could be a possibility. Saylor's got 6 months worth of dividend coverage left, and he is kind of stuck between a rock and a hard place unless Bitcoin goes up from here. So, TBC. It is, of course, TBC, but here is the reality, right? I always said once Bitcoin comes down to this 200 simple, I'm going to be a buyer. If it comes lower to this 100 month, I'm going to be a buyer. And so I could almost stop the video here. This is a level that I've had in my mind for a very long time, and it's come into these levels. And I think sometimes, for me anyway, this is absolutely for me. You should do whatever you want. I have a plan, and I kind of got to stick to that plan once things happen. Now, of course, it can be dynamic, and I can change my mind and all that sort of stuff because data is data, and I always want to be taking in as much information as I can. If the thesis changes, the thesis changes. But for me, the thesis for Bitcoin hasn't exactly changed at all. So very simply, this region all the way through here is a level that I have wanted to buy Bitcoin at for a while. It's come into those levels, so quite simply, I'm going to be a buyer. Now, the other thing is that this is the chart of supply in profit and loss. Okay, so what that means is how much Bitcoin being held in people's wallets, how many of those people have made money versus how many of those wallets have lost money. And what you can see is that normally when more users, when more people on the network are in the red, this red chart at the bottom down here, what you can see here is there's this little line going through here. This gray one is Bitcoin price, okay? Then you've got blue is the supply that's in profit, and then red is a supply that's in loss. What you can see is that generally when the red crosses the blue, i.e. more people are losing money than making money on the network, more people are holding underwater positions, Bitcoin tends to find a bottom in those areas. Now, it's not immediate. It's very slow. This is a 16-year chart. Look, this one here took an entire year to bottom. This one here took sort of like 6 months-ish to bottom. But again, the red crossed the blue, and look, Bitcoin was putting in lows at those levels in 2018. Again here, right? This is during Luna, FTX, etc. The red crossed the green, only briefly in this time actually, but that was where the bottom eventually came from. And now, of course, this red hasn't actually crossed the blue yet. We are just coming into this level right here. You can see right here, we're just coming into the level where the red is beginning to cross the blue. Now, this is clear, or has been in the past, clear signal. Again, it doesn't necessarily mean things are going to turn around here. In fact, it doesn't mean that at all. Generally, it takes a while. It takes a long time. Bottomings processes, they take time. They require time. They require price, and they require time. And It depends what sort of like amount of either one is given for that particular bottom to form, but they do generally require both. Under 60k, there are more losers than winners on the network. Above 60k, there are more winners than losers on the network. So I think they're probably going to have to stay under 60k for a period of time to really force those winners, essentially, out of the network, because that's what the network needs. In the past, it's needed that, right? It's needed that 50% cross and that to remain there for a while. So my estimations here are that 60k is breached and 60k actually is breached for a period of time. You know, if we go back to this chart here, I think it is quite likely we touch this 100 exponential moving average. But like I said, I'm a buyer here, and I'm going to be scaling in all the way down. I don't mind if I don't hit the bottom perfectly. I do mind if I don't capture anywhere near the bottom personally. The other thing, right, is that Bitcoin against gold. If we think about gold as real money, gold is money. Gold is the true sort of like barometer of what money is, and the true barometer for things. Are things getting more expensive in real terms, or are they just getting more expensive in inflationary terms? Bitcoin against gold has put in this high to low, and it's normally taken about 13 months. Okay, so this is Bitcoin priced in gold. Bitcoin's high to Bitcoin's low has normally taken about 13 months to form. Again, from the high to the low was about 13 months. From the high to the low, it was 13 months. And from the high to the low recently, this is in 2024, this high in December, Bitcoin came into this low of 12 ounces of gold would buy you 1 Bitcoin, okay? And so this level was hit just at the exact same time as normal Bitcoin to gold bottoms form. Again, it's not a smoking gun, you know, it's not an absolute like home run. It doesn't necessarily mean that Bitcoin has to bottom against gold, but this is a series of higher highs and higher lows. Higher highs, higher lows, higher high, higher low. Yes, this is only just a higher high, and now we're on higher low watch. Is it going to hold this higher low? But fundamentally, Bitcoin has actually got, you know, an extra kind of 40-ish% it can fall against gold for this higher low structure to be in place. And personally, I think gold is probably heading to, you know, 3,000 before it goes and breaks new all-time highs again. So my money is actually on Bitcoin continuing to outperform gold here. I don't necessarily think Bitcoin can't come lower than 14 ounces necessarily. Maybe this low is touched again. Maybe it's even swept, okay? But again, just a longer term sort of like view that typically Bitcoin against gold tends to find bottoms about just over a year after its high. And it's arguably happened again. This is the process of it happening, so you're never going to know. Hindsight's going to be 2020. And of course, you can just wait for confirmation. That is absolutely a strategy as well. For me, I'm happy for these buys to be underwater, as I said. And okay, now here's another reason, right? This is the gold chart. This is gold priced in dollars, of course. Let's put it on the 3-month time frame. Otherwise, we're going to have it's going to be hard to see. So gold priced in dollars, up and to the right. Yes, of course. But if we look at gold and we price it in the amount of dollars in circulation, so US M2, it's not the perfect barometer for inflation, but you know, it's basically a good proxy for how many dollars have the US been pushing, or have the Federal Reserve been pushing into the economy. How much inflation has there been that's sort of like in people's pockets? It's not perfect, but it's a pretty good barometer. Look, gold is down from its 1980 high, 60% to the high, and right now 67%. So what does that mean? It means that since this period here in 1980, so much money has been pushed into circulation that in terms of the amount of money that now exists, gold is actually down 70%. It should be about 3x higher than it is right now, but it's not. And that's because there's so many, it hasn't actually kept up with the amount of dollars that have come into circulation. This says two things really. It says one thing about the dollars, like it's surprising how effective the dollar has been at holding up its ability, right, to not inflate away at ridiculous numbers. But it also says that gold hasn't actually managed to keep up with that, which is interesting for sure. Now this is the SPX, okay? SPX priced in dollars, of course. It's just a ridiculous up and to the right chart, just non-stop up and to the right. You know, equity pullbacks are like laughable when you look at it in this chart. Apart from this one in 2001, I guess, but still, you know, absolutely ridiculous. Now, if we chart the SPX though, and we do it against the same thing, USM2, then it is only just coming into its high from 2000. So it's just hit that same high. So that the S&P 500 literally this week, it's kind of mad really, just this week, hit the same level that it hit back in 1999 or 2000, priced in the amount of dollars in circulation. Now this is relevant, but what it means is that in real terms, like in actual terms of how many dollars have been pushed into the economy in the last 26 years, despite all the incredible innovation, amazing companies in the US, all the oil that's been produced, all the natural resources, everything like that, it's gone nowhere in the amount of money that's been pushed into circulation. Now that is interesting. That is something, I think, personally. And if we look at Bitcoin here, priced in this is Bitcoin priced in money supply as well. Look, Bitcoin's the only thing. Now, admittedly, it doesn't go far enough back. These things go back to 1900. So you could argue that there just hasn't been enough time for Bitcoin to actually fail yet. Fine, that's a reasonable argument to make. But Bitcoin is the only thing to make higher highs, higher lows, higher highs and higher lows against the US money supply. So far, we've not seen an asset. Yes, obviously some companies have done this as well. I'm not saying they haven't, but maybe the best store of value is simply a GPU, and you should just buy NVIDIA chips because you're storing your money in GPUs. That could be an argument, right? I don't particularly think that's how it's going to play out. I think obviously GPUs are going to be incredibly expensive. They're going to probably going to be commodity markets for GPUs in the not too distant future. Anyway, I digress. This is the only chance to make higher highs, higher lows against the ever increasing monetary supply. Okay. For me, anyway, that's interesting. Now, you could argue that Bitcoin's got a pretty long way to go until it doesn't make a higher high against the money supply. This is one swing here, all the way to the top. This sort of stall out here, it can break below this level. That's probably fine, to be honest. It has got a decent chunk of the way down it can go. I don't particularly want Bitcoin to go down to, whatever that would actually end up being, like 20K. I don't think that would be a good thing, but that on these longer term charts, you have got a lot of leeway for the structure to remain intact. But this is slow, right? This is a monthly chart. This is super slow. Again, I'm not saying Bitcoin has to bottom here this month. In fact, I don't think it does. I think it needs time. But the way I like to think about things is from a risk adjusted perspective or a probability perspective, okay? And so this is why I want to show you this chart here quickly. This is the amount of time from high to low. Now, of course, this is just standard 4-year cycle stuff. Bitcoin from high to low has typically lasted, roughly a year from the high to the low. It's taken about a year, a bit longer than a year, a bit longer than a year. So if it plays out like it has done in the past, then we're talking obviously about the low sort of coming in October, okay? Now, if we take how long it's been so far from high to current price, it has been 35 weeks, okay? And normally it's 52. So right now we're give or take a bit further than 60% through this period, 65%, close to 70%. That means for every week that goes on, the probability suggests we are a week closer to the eventual bottom, which means that gets closer to the eventual bottom, not actually making it to the full amount of time. Now, maybe it does make it to the full amount of time, maybe it goes longer. I'm not trying to time the exact bottom, and I don't think I'm probably ever going to be able to make that perfectly. I think there's some amazing memes of everyone queuing up to buy Bitcoin in October. Whatever everyone thinks is going to happen is, probably unlikely to happen. Still, time needs to play out for this low to really fully set in. There is the obviously enormous risk right now of Saylor strategy having to continue to sell Bitcoin. Obviously, they sold a little bit last week. I actually think there's a very good chance, right? I think there's a very good chance that strategy have sold a decent chunk of Bitcoin this week. I think we might come out on Monday, in a couple of days, and we might find that strategy have sold the amount of Bitcoin that they needed to sell to cover their dividend obligations for a while. I think it would be a mistake if they haven't done that. Now, why do I think that? Because they basically put themselves in a really, really bad position. So if you don't know what happened, they had 2 years worth of runway, okay? But recently, last week, or the week, they bought back, they used 18 months worth of coverage of their obligations, basically, so their expenses, to pay down some debt, which was a massive mistake. This debt wasn't due until 2029. They were completely fine in terms of their dividend coverage for 2 years. Strategy, MSTR, is Bitcoin with time decay. So they decayed their time by about 75%. They just chopped off 75% of all the time they had left. They just chopped it off. I really think they may well have sold a lot of Bitcoin this week. I think they might have sold the $2 billion they need to cover their yearly obligations. If you look over here, annual dividend obligations. So I think they might have like raised close to sort of like $2 billion in cash in total. Here's their USD cash reserve. They've got $90 million right now. They've got $1.7 billion of obligations over the next 12 months, which means they've only got 6 months of coverage. Really, this is an irrelevant point, to be honest, I think. Everyone always says about this 30-year coverage thing. I think for the most part, for right now, it's an irrelevant point. I think they might have sold a bunch of Bitcoin, and I think they might bring this cash reserve back to sort of 2 billion. And I think this then jumps to kind of like, you know, they might have sold $2 billion. This then jumps back to sort of 18 to sort of 24 months. And I think it sort of like puts a band-aid over the issue for the not too distant future. Now, TBC, whether this comes out on Monday and they have sold, we'll have to see. I think it'll be a mistake if they haven't just ripped the band-aid off, reduced this cash reserve, sold the Bitcoin they needed to make sure that they can continue to fund these dividend obligations. Because if they don't do that, then basically all the instruments that they've created to try and buy Bitcoin are likely to just not come back for a very, very long time. And their entire bet is now just like praying that Bitcoin comes back to above their average cost, which is like, you know, 75K, but really it needs to go back to 80, 90K, and then they're chilling again, to be honest. So anyway, we are also seeing like some amazing sentiment things. You know, Jim Cramer, Saylor murdered Bitcoin. Maybe he did. Also, honestly, this is like, I think this is horrendously bearish. Saylor came out yesterday and he did like some blog post on Bitcoin about why Bitcoin's amazing. Honestly, if Saylor's going to these doing this kind of thing, I think that's bearish. And I think probably more pain is going to be coming for him for sure. And again, the biggest issue right now as well, in terms of crypto generally, almost certainly, is the fact that we've got an equity correction potentially in our midst right now. Yesterday, if we open up the NASDAQ, was the worst day in history in terms of how many points the NASDAQ lost in one day. It wasn't the worst day in history in terms of down price action, because obviously that's on a percentage basis, but it was the worst like total loss in points. So from 30,500 points to like over 1,100 points was the biggest amount of points lost in NASDAQ history. So, you know, arguably to be expected after this absolutely ridiculous rally to the upside. But there's a lot of sort of like cracks that sort of seem to be more stories coming out of tokens costing so much, and there's even these kind of like stories of socialization of the risk for OpenAI. And, you know, I really actually would recommend, if you want a bit more information on how all of this is playing out in terms of its interactions with equities, where they're kind of going and the risks there, please go check out this show I did with Ed Dowd. Ed Dowd is like an absolute OG in regards to spotting out kind of like things that don't really seem right. He called the .com crash. He was working for BlackRock at the time. Same thing in 2008. During this period of time, actually, he flipped $2 billion into a $14 billion fund for BlackRock. The guy's just like so smart. He actually wrote this amazing book on COVID as well. Like, he realized that there was a bunch of like excess deaths. Wrote all the statistical analysis on COVID. That book was absolutely wicked. He was on at 𝗘𝗃𝗂𝗧 and all sorts of shit. But anyway, go check out this show. Ed goes into detail around about what is going on with the sort of like risks with circular financing. And none of this is to say that AI isn't real. Obviously, it's amazing, transformative tech. I use it every single day. The issue is right now, the companies that are deploying the models are not profitable. The question is, how long can they remain not profitable for? And, you know, that is, of course, TBC. So NASDAQ pretty bad day yesterday. I'm not sure if, you know, if the NASDAQ has this actual massive correction, how's crypto and equity, if the NASDAQ has this massive correction, how is crypto going to hold up? Probably not great, to be honest. Maybe Bitcoin, again, tends to kind of front run stuff. What you typically see is Bitcoin sort of like front run stuff, right? So if we do get a large correction across equities, we're probably going to have intervention from, you know, the Federal Reserve. They're probably going to step in and do something. They're going to lower rates and try and juice the economy again. This is what Bitcoin essentially is built for, which is why I think that, you know, the equity correction that is likely to come at some point is likely to be met with stimulus. And this stimulus, personally, I think might actually be akin to kind of like the stimulus that was pushed and has been pushed into China over the last few years, and only really found its way to kind of the hard assets. The actual stock market didn't really get juiced that much. It didn't really flow into the economy. It didn't really flow into GDP numbers. China are still struggling. They're still struggling to get out of this, property crisis that they've been in for a very long time. Maybe I should do a full show on this. But basically, they debased the yuan straight into gold. I think there's a very good chance that hard assets do incredibly well over the next 4 to 6 years. And, the stock market might not. Now, that sounds crazy with the sort of like advent of AI, but these things tend to happen. Boom, bust cycles where there's massive overinvestment. Things get a little bit ahead of their skis, and then some players pick up with the tools that were left and create absolutely enormous companies. Is that robotics? Is that something else? Who knows, right? Probably is going to be obviously in robotics. There is going to be some LLM in a robot that's just doing incredible stuff. Does it happen next year? Does it happen in 4 years? Things tend to take longer than we expect most of the time. Who knows? As I said, I've been very bearish for a very long time, and now I think I'm actually going to be deploying some long-term capital. If you did manage to get this far, honestly, I really, really appreciate it. Please go and check out MetaMask if you can. MetaMask are doing all kinds of cool stuff now as well. You can have a card here. So you've got like an application on your phone. The card can attach to it, and you can just go and spend like on-chain money, on-chain stuff anywhere. Unbelievably convenient. Massive, massive thanks to MetaMask for sponsoring the show. Really, really appreciate it. They've also got this awesome hotel app, actually. If you've got the card, you can have access to this hotel app, right? Sounds crazy, but honestly, the discounts here are wicked. You can get like 60, 70% cash back on hotel purchases. So we're going to token 2049. Obviously, I'm booking through this. Incredible deal. Anyway, guys, thank you so much for watching. Honestly, I really appreciate it so much, taking your time, spending it here on a Saturday evening. Have an excellent day. I will see you next time. Ciao, ciao.